The UK economy is going gangbusters, or at least that's what our Prime Minister wants us to believe right now. Data over the course of the week will reveal just how much of that is true. Tomorrow begins with jobs data for the UK, and then later in the week we get GDP data for the month of April, and that really will show whether Q1 was just an unusual pop in economic activity here, or whether we're actually starting to see a more normalised trend given the tax burden and given the very poor weather we had over the Easter. Good morning, welcome back to Morning Markets at True Potential. It's Monday the 10th of June. We have a lot of data to cover in the week ahead. The US will be the focus because of the meeting from the Federal Reserve on Wednesday. Also, we have inflation data in the US earlier that day. This will really set the tone for how that meeting is going to be digested by markets. CPI data in the US is currently around about 3.5%. That is, inflation remains both well above target and above the Fed's own forecast. So the tone on Wednesday's meeting is likely to be a little bit more hawkish than we have normally seen over the last 6 months. Markets expect no change in policy anyway, so there's little the Federal Reserve can do to surprise markets. However, they are likely to be forced to bias up their refreshed inflation forecast for the rest of the year, taking account of those sticky inflation pressures. This shouldn't really be a problem for markets because we are so focused on strong nominal global growth right now that it's expected that the US Federal Reserve will remain on hold with interest rates for some months to come. However, in the UK, a bit more of a focus because of the impressive data over the years so far. Tomorrow we get the updated jobs data. Will it confirm the trend of both rising full-time employment but also rising unemployment? An unusual phenomenon here, but perhaps indicates a more normalised jobs market. That is, high immigration is going into rising unemployment, but more and more people are finding opportunities switching from part-time to full-time work. And hopefully that should bring down some of the pressures on wages we have seen over the last 18 months. That will be the particular focus for the Bank of England, the wage pressures, because any cooling in that wage data, as the main effects from the rise in the national living wage fall out, would perhaps allow the Bank of England to consider a rate cut later in the summer and follow what the ECB did last week, where they began a cycle of cutting rates, beginning with a 25 basis point cut. And then the week will end with the main event being UK GDP data for the month of April. So recall just how strong the data was earlier in the year. Well, the wet weather and Easter is likely to bring the number down to almost zero. That's certainly what the consensus thinks. That's not zero for the year, but just zero for the month. And it's also likely some payback from just how strong January, February and March were together. So we're likely to see a number around zero, which just indicates a small moderation in economic output here. However, survey data continues to indicate robust expectations for GDP and economic growth over the rest of the year. So all in, a very interesting week ahead. Headlines and markets will dominate with the US data, but perhaps the UK is more interesting given where we are in the inflation cycle and the opportunity perhaps later in the month for the Bank of England to acknowledge that. So please join colleagues and myself over the course of the week as we update you on these interesting economic events. Thank you.